Let's take a look at some charts on Monero for this week's article on Brave New Coin. So if we compare some on-chain stats and other such metrics for coins with privacy capabilities, we get some interesting results. Now this chart is a bit of a data crime. None of these can actually be compared directly. Some of these don't have data that's even measurable. Some of these have partial data that's measurable, like Zcash. If I don't say that some of these metrics for Zcash don't include shielded transactions, I will get accosted by the Zcash community. So this is really all just an estimate. Really the only thing that is solid here, I guess the on-chain stuff isn't, but market cap, total fees, GitHub commits, all those are convincingly real in that there's no ifs, ands, or buts about the absolute numbers there. For active addresses, transactions per day, daily transaction volume, it's a little iffy on what those values even represent for each specific chain listed here, because they have all different sorts of things going on under the hood as far as on-chain mixing, essentially, or coin join, whirlpools type stuff that sort of increases values, perhaps for Dash in the active address realm. Transactions per day for Zcash does not include shielded addresses, so it's slightly lower than the actual value. But all in all, looks like Monero's leading the metrics you can actually measure. Monero hash rate has continued to increase since the RandomX consensus algorithm switchover. You can't compare RandomX to CryptoNight algorithm directly, so even though it looks like this is a new all-time high, it's just a completely different chain as far as hash rate's concerned. The spikes in hash rate are most likely cloud mining and or botnet activity related. They do not look organic as far as sustained activity is concerned. It looks like the new normal is this range as far as hash rate is concerned. Any spikes shouldn't be convincingly considered as real values. If you look at hash rate, most of it is still concentrated into 2 or 3 pools, which is, I guess, unknown isn't a pool, but we'll say 2 pools, which is always an issue for any proof of work chain. You want decentralization among the pools, because if there's pool collusion or miner collusion, all sorts of weirdness can happen as far as consensus and censoring transactions is concerned. Not really a major issue, and it's difficult to pull off in the current split. But if these 2 mining pools are owned by the same person, for example, then that becomes increasingly easier to pull off. So hopefully over time, even with the RandomX algorithm, that this smooths out over time. If you look at Monero's current supply versus BTC and inflation versus BTC, they're pretty close. They sort of mirror each other. BTC has stepwise reduction in inflation, whereas Monero has a continued reduction in inflation. BTC inflation recently hit an all-time low because hash rate got super low before a difficulty adjustment. So block times were high, and if block times are high, fewer Bitcoin get created in that period. As for privacy coins, Monero has the lowest hash rate by far, or the lowest inflation by far amongst all of them. If we look at transactions per day and difficulty on the chain, both are sitting at or near all-time highs. Again, potentially related to botnet, cloudnet, cryptojacking activities. Fees are extremely high relatively, historically, I guess, for Monero. So there's definitely a lot of on-chain activity going on with Monero, which is good. It's bullish for any chain. Fees on Monero are currently higher than the other chains, but arguably Monero provides the best privacy. The other chains, except for Grin, are optional privacy, not default privacy. So you're kind of getting what you pay for as far as the expectation of private transactions, untraceable transactions. Looking at the mean block size, Monero in the blue here, bigger block size than everything else. You can't really compare these directly, but to me it just says more people are using Monero, most likely. Obviously, if there's different scaling mechanisms in place here on each of the chains, which definitely is the case, this is going to look a little different for each chain. You can't really compare them directly. But even with that, Monero has been leading in block size the entire year for the most part. Google Trends shows very little search activity for the word Monero over the past 2 years, unless there are a bunch of listings, coin exchange listings that happen. I really don't see Monero spiking in Google Trends or anything like that anytime soon. If you look at technicals, we have 5200 EMA, yearly pivots, Bitfinex open interest, VPVR, volume, and RSI. So oddly, the net open interest for Bitfinex is short right now, which may be the only pair that is net short. Kind of weird. Historically, for the most part, Monero has been net long. This just means there's more people short than long right now. It's understandable. It's at a local high. It's at a historic local high. It's at a historic 3-digit level. I still think this goes higher. I think these shorts fuel highs. If you're short and price goes to a new local high, you start to get nervous. People start to close their short. People get stopped out. That fuels prices higher, and then it creates this cascading effect, in this case, to the upside. Although there isn't really many shorts to squeeze at this point. It's not like a massive short interest or anything that's going to get dumped, creating this upside momentum. But I think it'll be an effect. I don't think it'll be a massive effect. VPVR is pretty much all support at this point. Really big noticeable levels here. And then some resistance on the way up, 160, 200, 250, 340, something like that. We'll see what happens when we get there, but overall trend looks really good. 5200 bull cross happened a few months ago. That's sustained. Any bearish divergence at this point has burned off. RSI is reset to 50. So to me, Monero still looks good on the USD pair as far as trend and any concern for any pullbacks. Monero quietly had this bullish TK recross a few weeks ago that I didn't see anybody talking about, including myself, but I did fuel higher prices just as it did in BTC. These bullish TK recrosses above the cloud are the single most bullish indicator in the cloud system because it says price was previously bullish, reconsolidated, made a decision, and said, you know what? We want more. So price went higher. That can happen again and again and again. Right now, it obviously looks like things have relaxed a bit. Kijun support is cleanly above 3 digits here at around 110. So overall, again, trend still looks fine. Monero BTC took a bit of a hit. It hit the resistance zone kind of as expected at 011 and then just immediately reversed back to the early pivot, back to the 200. So I think it needs a little consolidation. I really think it's going to be hard for Monero to outperform BTC in the near term, midterm, long term. I think it'll probably just live around 01, 013, something like that, until something dramatic happens with Monero as far as a chart pattern or something that can propel the bullish momentum higher. But overall, on-chain stats look probably the best they've ever looked for Monero. Total fees are high, which is bullish for any chain. Transactions per day are high, hash rate is high, everything is chugging along smoothly, and trend-wise, price looks very bullish.